Greetings from Sacramento State and the Sacramento Business Review. 2013 turned out to be a fairly good year for the Sacramento region. We saw the labor market improve quite a bit. The unemployment rate came down from the worst period of 13.5% to more like 9% and then down to 8.5%, and is still improving as we speak. The residential real estate market really was on fire in the region because we saw the housing market come back very nicely, and we saw the median values of homes improve regardless of the pocket you were in. The capital markets in general in 2013 were absolutely spectacular. If you look at the stock market, you look at the NASDAQ, you look at the S&P 500, you look at the Dow Jones Industrials average, literally we saw the market increase anywhere from 27% to 40% depending on which market index you were looking at. So a great year for stock market investors. 2013 in general was a great year. 2014 may not be as spectacular as 2013 for the local region when it comes to the job market or when it comes to the real estate market, especially for homes. But I think our prediction is that 2014 is going to be an okay year. We will see the job market continue to improve. It's likely that the unemployment rate is going to come down a little bit more from where it is, and more jobs will be created in the next 1 year. Our challenge is that the region has not seen any large companies that have created jobs at the higher end of the wage distribution. We clearly have seen a lot of retail jobs come back. We have seen the minimum wage jobs come back in the hospitality, in the leisure, in the service sector industry. But I think what Sacramento needs more going forward is more high-paying jobs. And we can only hope that 2014 we will see more momentum in those kind of jobs. One of the challenges that we also see right now is that with the mortgage rates rising somewhat, and clearly the inventory levels having cleared quite a bit, we see that the residential real estate market may not be as heated as we saw this past year. And so we might see a slowdown in the housing industry. We might see a slowdown in the construction industry. And the real estate market, while we still predict a positive picture for it, it's certainly not going to be as heated up and as aggressive as we saw this past year. The banking sector, we have been predicting for a couple of years now that it's time for consolidation. We probably will see more mergers and acquisitions because for the region, the top line growth is not there because there are only that many creditworthy clients that banks can chase, and the yield curve has not steepened enough to allow the banks to be extremely profitable. The Small Business Confidence Index that we build is right now at record optimistic levels because the small business economy is coming back. And as I mentioned earlier, with the clouds clearing quite a bit in terms of the regulatory environment and the tax environment, I think that the small businesses have a slightly clearer picture going forward of what to expect. And therefore, they're a lot more optimistic and they're a lot more confident of what 2014 is going to hold. So we're also predicting that the capital markets are going to be a good year, but not a great year like the one we saw this past year. So typically great years are followed by good years. So I think the stock market is going to do well this year also because the larger companies are still reporting earnings that are coming in at the levels that as anticipated. So overall, I think 2014 is going to be a good year, and we look forward to brighter prospects for Sacramento. We are glad that the Sacramento Kings are staying. We are glad that they are trying to put in a new arena because all those will act as catalysts for more jobs, more companies, better population centers, and better economic centers.